Hi, welcome to the Market Alert for Monday, the 10th of October 2022. So stocks puke on good labour news market and rate hike odds spike once more. The figures came out far worse. Well, actually, they came out better than forecast. But unfortunately, as I said in the last Market Alert, in a rate hiking scenario, an inflationary cycle, this is actually seen as bad news. Prior to the inflation and the rate rising cycle that we now found ourselves in, it would have been a positive and the market would have moved up 900 points instead of eventually dropping 900 points. So good news is bad news in that sense. September unemployment rate tumbles, payrolls print above expectation, the lowest since April 2021. Anyone hoping to see the reality in the US labour market will have to wait until after the midterms. Yes, absolutely. November. That's when it all starts to fall apart. They're just holding everything together at the moment to make Biden look good. Fed mouthpiece on track for another large rate increase after solid jobs report. And shocking consumer credit numbers. Everyone maxed out on their credit card as economy slid into recession. August saw the second highest surge in credit card debt on record. Economic news. What have we got today and this week? Let's just have a quick look for today. It's a bank holiday today in the US. It's Columbus Day today. Government instruments will be closed, i.e. bonds, etc., but everything else is open. IMF, International Mafia Fund meeting today as well. And Brainard is out as well at 1:35. Let's have a look for the rest of the week. I'm just going to change these economic news items and just remove the low impact ones for the moment so I can see what we've got this week, the important ones. Bank of England, Bailey speaking tomorrow at 7:35 p.m. GDP numbers for the UK on Wednesday. And what else have we got? Member Phil is speaking. PPI for the US as well, which will be an interesting one. We've got the core PPI as well. Criminal Lagarde is out on Wednesday as well. G20 meeting, blimey, it's all happening. Oh, we got FOMC meeting minutes, but there's no rate hike. This is just a review. Thursday, we've got US CPI, so that's the big one for the week. That's forecast to be lower year on year, but up slightly for month on month. Core CPI as well, forecast slightly lower. G20 meeting again, and what else have we got? Friday, there's a lot there as well. Retail sales for the US, all US news. Saturday's an interesting one, isn't it? We've got two central bankers speaking on Saturday next, the 15th of October. That's an interesting one, isn't it? So yeah, there we go. So next week must be the UK CPI. But anyway, there's a lot to be getting on with this week. Today, nothing really to shout about. Market will make its own direction because there's only Brainard speaking, and that's after the market's closed for the DAX and the FTSE. So let's have a look at the market, starting off with the Dow market lower on Friday on those NFP numbers. And you can see they're trading back to 62-78% retracement. So watch this level, see if the market will hold at 78 and can manage to climb back off this. Like I say, there's no major economic news today. Friday, saw there the market down 913 points. The market bouncing up overnight to the close. But at the moment, heading back down towards that low. The low is critical and crucial that it stays above this level. If it fails to do so, then the market will be heading lower. And if we head lower, we'll be going down to 89 and a possible retest of the low where you can see the green line there. And the price you're looking at on this platform is 28,588. So keep an eye on those today. But just going back to the 30-minute chart, if we manage to get above the close, we've got the 50 EMA, DP, R1 and the high, and that's a long way back. That's another 900 points back in the upward direction if the market is going to move back to the upside, and that's a reversal and a half given no economic news. Meanwhile, in the German DAX, similar picture. We've got the market down on those numbers. Let's just have a look, see where we are. We're bang on the golden ratio, 62% there. Having already traded through the 38 and 50. So watch this area here. 30 minutes on the DAX. You can see prices moving lower there. The news came out. We moved 100, 200, 300 points in the DAX overnight, so you can see we're already below the low. The market's attempted to try and get above this but has failed so far and is trying to move to the downside at the moment. So again, watch the 78.89, which you can see, actually if I just remove these two lines here, very important. You've got an S1 in here which might lend a bit of support, which is around the 89 as well, but the market needs to get back above that low if it is going to move back to the upside. In Friday's session in the 5-minute chart, we started off with the market moving to the previous day's close. The market found support, cash market moved up and then came back to the close and then traded between the DP, the 200 MA, until it had the economic news there, the non-farm payroll numbers. When these came out, the market was hit hard and then it just drifted down, and then overnight prices have continued to move lower, as it can be seen here, and we've just slammed through the low, which is not a good sign, but we've got a bit of buying coming into the market at the moment. Again, if you look at this in more detail here, get the right place, this low here to here, these are the downside areas, and again you can see those same numbers, and there's the S1 that you want to keep an eye on just in case we come through and hit this level as well. So there's nothing really in between. There's a BRN at the 12,150, and then we go down to the S1 after this, after taking out where the buying came in there on the overnight market. Results for last week. So for the week, 608.13, profit factor of 8.51, and the win-loss 75.25 there, well 76.24, whatever. And the total so far since the 19th of January, as I do each week, 31,910 in profits on a 10,000 account that started in January the 19th to be precise. We got 2.45 profit factor, and we're now inching up a bit more there. We were 55, 45, 56, 44 on the win-loss ratio there. A bit more selective on the trade setup, and also moving to a 5-minute chart to hold the trade as well. So we're increasing the returns once the market starts to move in our favour. In the S&P, also trading back to the 78% retracement, up slightly on the overnight. No economic news today, so the market trying to hold at the low like the Dow is at the moment as well. But Friday, you can see the reaction there to the non-farm payrolls, down a bit overnight and just holding. But it's not looking good at the moment. They need to do something about driving this back to the upside. In the FTSE, the stronger of all of these markets, holding quite nicely during Friday's pullback there. A bit weak overnight, so I'll look at this in a bit more detail. We're already through the low as well, which is not good. S2 is going to be a support area, and we're also through the 6,000. Just have a look at that a bit closer. 6,950 as well for the FTSE at the moment. In the currencies, down on Friday with the dollar moving to the upside. We're at the 200 MA in the GBP JPY. Market finding a bit of support there. You'll see the market's reaction to those non-farm payroll numbers there. The dollar spiking to the upside on the promise or speculation that there is going to be another rate hike at the next FOMC meeting, which is going to be next month now in November. So the market's got a chance to rally a bit before that happens. You can see overnight the market is just sitting sideways there. Again, it's got to stay above Friday's low. The pound also moving back, as you can see there. We've had that high up in the, let me just grab the actual price instead of guessing it. We've had a high back to that 114 that we've seen in the monthly chart for a long time. Remember, the market took out, as can be seen there. So we've been up to 114. The market now pulling back and sitting around the 110 level. So having pulled back 400 points as well for the British pound. We need to keep the low in for the pound, unless we're going to go down and retest that area of parity. And if we do, then the Bank of England are going to have to come out and do something else again. But at the moment, we're a good distance from that. And you can see there's been a bit of support overnight in this area too. And in the metals, you can see that silver's started to be hammered back to the downside, heading to the 50% retracement there, 1958, 1950. No surprise really that the doing this. A dollar up obviously is a factor as well, but you can see in the 30-minute chart there, hammered on Friday with those positive numbers which are actually negative for the current cycle that we find ourselves in, and that's had an impact on the price of silver overnight, hammering through the low and sending the market lower there. Gold also back to 38%, holding a bit better than the silver market. Yeah, you can see a big hammering on Friday, and then also taking out the low for the overnight. For Friday as well there on the overnight market. Dollar up strongly during Friday, up on the overnight electronic market for the dollar as well. And you can see that they're taking out Friday's high, which is why you're seeing pressure at the metals lows on Friday or from Friday. So there we go. So let's see what news we get today. If any, there is no sort of economic news. It's just down to whether there's any geopolitical news to move the markets. But we've got Brainard, but that's after the market, so absolutely nothing. Bank holiday in the US. Generally, the market would move to the upside, but what with the bridge being blown up in Crimea and that starting to kick off a bit, who knows? The markets could be geopolitically driven today. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.